Hey guys, it's Chris Wong. I'm filming this video as of November 20th, 2025, and I'd like to talk about criticism about the margin calls I experience. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio and trying to achieve financial independence, retire early. So this is based on comments I get. These are based on conversations I have with other people. Like I would get criticized for using margin in general, or I would get criticized for getting margin calls. And I just want to address a few concerns. I just want to address my thoughts about going forward with my portfolio. So I would start off with saying that this week, the biggest reason why I got margin call is because the MicroStrategy ETFs went down a lot. Bitcoin got affected as well, so MicroStrategy got affected even harder. And because I did have a lot of MicroStrategy ETFs, so I lost a lot of buying power and the equity went down a lot and it put me into a margin call. But just because I got margin called doesn't mean that I'm going to fail completely. I just have to have a lot of precautions in case it happens. So when I prepare myself for margin calls this time compared to last April, I have plenty of short inverse ETFs to protect me in the event this happens. And I also had cash ETFs in my Equestrian account, just in case I just need to sell it and then not lose money on the capital. I also put money aside to try to build an emergency fund in case something like this happens or in case I cannot use my account. So I made sure so far that I settled the margin call by contributing cash into my account to try to minimize transactions, and if I had to sell some shares of WNTR, I sold it at a profit. So far, selling margin calls this time, I haven't sold anything at a loss compared to like last April when I actually sold shares at a loss to settle margin call. When I start using margin, even before, I know that using margin can amplify gains, but could also amplify losses. I would say from experiencing using margin and experiencing margin calls, emotionally and the stress levels is that when you gain, you actually feel more excited even with using margin. But when there's losses, the stress, the emotions of feeling like you're losing money, it does amplify too. But understanding the mindset of being an investor, I'm not supposed to panic sell. I'm supposed to understand why I bought the investments in the first place. And if I made a mistake, I own up to it. So when I invest, whether with using margin or no margin, the goal is to invest for life. All my ETFs that I invest in, they all pay dividends. They all pay dividends on a monthly or a weekly basis. And I purposely pick ETFs that actually pay me dividends almost every single weekday. So I'm getting dividends from Monday through Friday. Sometimes I may not get a dividend that one day because of a holiday or because the brokerage pays the dividend late by an extra day or two. So some people ask me why invest in MicroStrategy if there's a very high risk for it. And because I like the high dividend yield compared to like other index-based ETFs. I like the high yield, but I knew when I want to buy MicroStrategy ETFs that I have to limit myself, that I'm not planning to use MicroStrategy ETFs with the long-term intention that I'm going to rely on this income to pay for rent or to pay for a mortgage. That was not my intention. My original intention to buy MicroStrategy ETFs was to have additional payout dates. It was actually to pay down the margin. The other criticism I get is I'm not aiming for total return, or I'm not going to become rich, or it's impossible to become millionaire. But my thinking is I'm not trying to become rich to the point that I want to drive an expensive car or try to live in a big house. My intention is to hit financial independence, retire early, to have enough dividend income that pays on a weekly or monthly basis that I can feel comfortable to pay rent, or maybe in the long-term future to get a house and pay a mortgage easily with dividends. I was just thinking about the mindset of someone investing with margin versus someone who wants to get a mortgage that's really expensive relative to their savings and their paychecks. And I was just thinking about someone I met years ago, how this person got a new job at a different city. And even before probation was passed, this person wanted to buy a house and want to try to get something as affordable as possible, thinking that the mortgage or thinking about the house was a path to financial independence. And this person had the father co-sign just to even get the house. So majority of my portfolio, whether it's RRSP, TFSA, non-registered margin accounts, joint accounts, my investments are mostly based on indexes, or they're based on multiple companies within the ETF. So my biggest holding is HHIS. HHIS makes up at least 40% of my Wealthsimple TFSA. I actually feel comfortable myself investing a lot into HHIS because they contain the big holdings of the S&P 500 and the NASDAQ 100. And it also has MicroStrategy and Coinbase. So even if MicroStrategy went down to zero within HHIS, I'm pretty sure the fund manager can change the holdings within HHIS. And even if they don't, HHIS will just go down in value, but the other holdings will protect the fund. I also think about the difference between like getting a mortgage or using margin. And I find myself when I do get margin called, I can actually just reduce how much margin I'm using. As long as I'm actually investing correctly and don't fully max out my margin. When the market was higher over 2 weeks ago, I knew I could use more margin, and I knew that I could max it up if I wanted to. But I also knew that I had to stop myself. And if I did buy more, I was actually more focused on buying inverse ETFs to protect me for events like the last few days. When I look at my account, I look at it from the point of view of a balance sheet. Assets equals liabilities plus owner's equity. And I look at it from the point of view of how much of my portfolio is equity and how much of it is liabilities. So liabilities is the amount of margin used. When I actually look at the equity percentage or the liability percentage, the amount of liabilities or the amount of margin usage was probably 55-60% at most that I use. And I found out from previous experience, if I really did max out the margin when the market's up and end up getting my liabilities to like 70%, so that means the minimum margin requirement was 30%. And if I invested everything into 30%, maxed up my margin, that would have been a lot worse for me. That would have been like if the market went down a lot and I had no inverse ETFs, then I knew I could lose a lot of money that way. I'm making a goal going forward not to buy any more investments on my margin account because I feel if I did, I feel tempted to keep buying more because it's a lot easier to buy more when the market is up compared to when the market is down. And if I want to buy more, I'm just going to buy more in my TFSA or in my joint account that I'm trying to build up. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.